Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that are held by Cathie Wood's ARK Invest. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at two growth stocks that not only have a place in Cathie Wood's ARK Invest ETFs, but also come in as strong buy ratings from analysts with some pretty attractive upside. So in today's video, we're going to take a look at these two companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's dive right into these two stocks. The first company on our list today is VERV Therapeutics. They trade under the ticker VERV and are currently priced at $62.65 per share. VERV Therapeutics focuses on heart disease, a leading cause of preventable death. They aim to develop and market new therapies for heart disease that are both transformative and once and done. VERV uses a novel approach to cardiovascular disease treatment based on single-course in vivo liver-directed gene editing treatments designed to attack the root cause of heart disease. The company's pipeline features two drug candidates, both which are in preclinical development phase. The leading candidate of the two, VERV-101, is under development for patients with HeFH, a genetic mutation that leads to high low-density lipid LDL-C levels in the blood and eventually arterial blockage. These are lead causes of heart attack and stroke, and a once-and-done treatment would mark an advance for patients currently on long-term medication courses. To raise capital for further research, VERV just hit the public market this summer. The stock went public in June when they released about 14 million shares set at a $19 price target. This was higher than the $16 to $18 range expected. VERV raised over $306 million in gross proceeds from their IPO. The stock closed its first day of trading at $31 per share and has doubled since then. ARK Invest purchased about 550,000 shares of the VERV stock, a position which is worth about $34 million today. One analyst feeling bullish on the VERV Therapeutics stock is Etzer DeRoot from Guggenheim. He says that although VERV is still in the early stages of development, we believe the company's single-course treatment has an opportunity to transform the chronic treatment and management of atherosclerosis, and our risk-adjusted NPV assumptions for familiar hypercholesterolemia alone, a subset of atherosclerotic individuals at higher risk of developing cardiovascular disease, justify current levels. We expect preclinical updates from VERV-101, including long-term durability data in non-human primates over the next 12 to 18 months, as well as positive updates from other gene editing programs to provide validation of VERV's platform and a path to potential near and longer-term upside. Etzer is one of 4 analysts that currently have a rating on the VERV stock, and it does come in as a strong buy. This is based on 3 buy ratings and 1 hold. The average price target comes in at $68.67 per share. At current prices, this would be an upside potential of 9.6%. Now we do have a hold rating that has a downside of 20%, and on the high end we have Etzer's price target of $84 per share, which would be a growth potential of nearly 34%. The second company that we're taking a look at is probably a bit better known. That is DraftKings. Trading under the ticker DKNG, they're currently priced at $59.46. DraftKings specializes in the world of online fantasy sports and sports betting. They are a major source of entertainment for sports fans worldwide, offering them vicarious participation and a chance to experience the risk inherent in the game. In recent months, the company has added online casino gaming and lottery games to its sports betting and fantasy league offerings. DraftKings has partnerships and works alongside pretty much all of the major sports leagues and sports outlets. Just last month, DraftKings made the notable acquisition of Golden Nugget. Adding the Golden Nugget enables greater iGaming market share potential while being more efficient with marketing and having multiple brands serving different customer segments. The Golden Nugget also has a very strong live dealer operational capabilities, which are difficult to develop and an important part of growing the iGaming portfolio. They're expecting resulting synergies of about $300 million in EBITDA. Also at the beginning of last month, DraftKings shared their second quarter earnings report. They've posted $298 million in total revenue, which was up 297% year over year. Looking forward, they've bumped up their fiscal 2021 revenue guidance from the range of $1.05 to $1.15 billion up to $1.21 to $1.29 billion. Achieving this will translate to year-over-year revenue growth of 88 to 100%. Cathie Wood's ARK Invest already had a position in DraftKings, so their most recent purchase was just an expansion of their position size, and it was a notable expansion at that. They bought over 9 million shares, which was an increase of 212%. Their total position in DraftKings is now over 13.5 million shares. That adds up to a healthy $800 million position. One analyst weighing in on the stock is Daniel Politzer from JP Morgan. He says that our favorable view of DraftKings reflects its position as a leading platform in USSB and iGaming, which we view as the most attractive growth vertical in gaming, their potential upside to their current 17% iGaming share as the company integrates Golden Nugget, fine-tunes its products, and targets casino-first customers, systematic buildup of highly differentiated, full-scale sports betting and media offering, and strong cross-sell capabilities. Now, the DraftKings stock has a total of 17 analyst ratings and does come in as a strong buy based on 13 buy ratings and 4 holds. The average price target comes in at $72.75, which would be a 22% upside from current prices. On the low end, we do have our hold ratings, with one at $51, which would be a 14% downside, and the highest price target comes from Daniel at Loop Capital at $105. That would be a 76% growth potential. So there are 2 great growth stocks held in Cathie Wood's ARK Invest ETFs. Of course, I always love hearing from you guys, so let me know your thoughts on these 2 companies or what other Cathie Wood holdings you love. I know she has a ton of great stocks within her ETFs, so make sure to share your thoughts in the comments down below. As always, keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please always make sure you're doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and I'll see you back here next time.